Hello, everybody. As with everything related to government, tax is also very complex. And apart from being complex, it also affects our cash flows. So today we are going to discuss how taxation on mutual funds happens. One. Second, we are also going to discuss how mutual fund taxation varies for NRIs. And third, and the most specific part will be how mutual fund taxation can be saved by residents of certain countries. To discuss the same with me, today I have got Mr. Shubham Patel, who is managing partner at CSPS and Associates, which is a leading CA firm. Welcome, Shubham. Welcome to the show.
Thank you so much, Ankit. Excited to be here at Wealthy Nivesh podcast. I really appreciate the work you are doing for your audience, for being enhancing the financial literacy for your audience. Thank you so much.
Thank you, and really thanks for you to travel all the way from Nagpur to Mumbai to conduct this podcast. That shows that how much you contributed for this podcast.
All the love for Wealthy Nivesh only.
Thank you. So Shubham, my first question is just tell us broadly how does taxation works on equity mutual fund schemes and debt mutual fund schemes.
So, Ankit, in case of equity mutual funds, you will be taxed at 12.5% if it is long term, definitely by deducting 1.25 lakhs on your capital gains. In case of debt mutual funds, you will be taxed at maximum marginal rate, whichever is applicable to you. And if it is a short term, if it is a shares or equity mutual fund, it will be taxed at 20%. Otherwise, it will be taxed at maximum marginal rates only.
So we can summarize that for equity mutual funds, whatever gains you make beyond 1.25 lakhs in one financial year, including on direct equity and mutual funds, that will be taxed at 12.5%.
Perfect.
So if I cite one example, if your 10 lakh becomes 15 lakhs, then 5 lakh is your gain, 5 lakh minus 1.25 lakh, 3.75 lakh, you have to pay 12.5% tax.
Correct.
While for debt fund, it will always be added to your marginal tax bracket.
Marginal tax bracket is nothing but it will be added to your normal income, be it
Normal
salary,
income.
interest income, or whatever it may be. It will be added to that income only.
And for short term, which is less than 1 year, all the gains in equity mutual fund will be taxed at 20%.
20%, correct.
Will that enjoy 1.25 lakh bracket
No.
or that is only for long term?
No, that is only for long term.
Okay. And Shubham, what is the difference for NRIs? So is there any different rate or any different logistics for them?
So, Ankit, in case of NRIs, the only difference is there is some withholding tax. At the time of their redemption, government will deduct at the rate of their maximum marginal rate in case of short term, or in case of long term, it will be deducted as 12.5%. Government will deduct TDS on that redemption amount.
So if it's an equity mutual fund, for short term, I will be straight away deducted 20% or marginal tax rate for equity mutual fund.
For equity mutual fund, if it is a long term, then 12.5%. Otherwise, it will be 20%.
Okay. And for that mutual fund, it will be always a marginal
Maximum,
tax
yes.
bracket.
It will be if you are coming under 30% tax slab, then it will be 30% plus surcharge plus cess.
And from what I understand, there won't be any benefit of 1.25 lakhs. Correct?
No, yes.
In
it is
case
not
of
available.
TDS.
Correct.
So only when you file the ITR, you can claim it back.
Yes. Actually, government just want the information. Whatever information you are, it is just for the information perspective only.
Okay. And because government can't aggregate whether his tax for the financial year is 1.5 or 1.2, so that's why they deduct on the whole amount. Then
Correct.
You have to go and you have to claim it back during filing the ITR.
Perfect understanding.
Now the most debated topic and the most novel topic which is going on for mutual fund taxation. How does mutual fund taxation happens for residents of say UAE or GCC countries? Can they save tax by any manner?
Yes, definitely. Actually, in case of these multilateral agreements, like there has been various multilateral agreements between the countries where you won't be taxed doubly. Actually, if you are getting taxed on the same income at two different countries, then it will be genuine hardship on the investors. It will be genuine hardship on the individuals which are earning in different countries, right? So in that case, there is a tool or treaty between the two countries which is named as DTAA or Double Taxation Avoidance Agreement between the countries, right? So this Indian government has entered into the DTAA with more than 90 countries, out of which GCC is one of them. This Gulf Cooperation Council. In that case, we need to go through all the articles. If it is uh, if actually if the asset is being immovable property or shares, it will be the right to tax will retain with the Indian government only. But in case of mutual fund is considered as a different asset. In that case, the right to tax retains with the GCC countries or the country in which you are residing.
So you are saying कि as per DTA, except for shares and property, everything else will be taxed in the country of residence.
Correct. You can say so, but actually we need to go through all the articles of it where each and every minute details like income from interest or directors remunerations, all these things are mentioned over there. So out of which mutual fund is considered as a tax exempt item. Why we are claiming in that thing that there is zero tax in GCC countries on personal income. So that way we can say mutual fund is exempt if you are redeeming in any Indian mutual funds.
Okay. So for the UAE, we can say that provided a TRC is there, we can claim the tax rebate, correct?
Correct.
And how is this TRC generated? How can I get this TRC?
The first precondition is that you must be the resident of that country on which you want to claim the tax benefit, right? So the first condition is you must stay for more than 182 days in that particular country, be it Dubai, be it UAE, or any other country from with which India has a DTAA with that country, right? So the first condition is you have to stay for more than 182 days. Next thing is you need to you need to apply for the tax residency certificate in that particular country. So the procedure is very simple. You just go to that government's portal, apply for this TRC application, provide the requisite documents, and along with this immigration report, which can prove that you stayed
You've
over
been
there for
resident.
more than 182 days. These conditions are different for other countries as well. In case of Singapore, they have some other this residency rules. You need to comply with that rules, and you can get the TRC.
Great. So Shubham, what we are doing at Wealthy Niveshna, we are inviting TRC from our investors, from our clients, and then basis 10F certificate, basis other documents, we are getting it fitted in their folio.
Okay.
And then at the time of redemption, there is no TDS for them.
Okay.
And we have been successful in doing it for UAE countries and other such countries. So my question to you is कि once TDS has been avoided to be paid, so like हमने coordinate किया, we coordinated with the AMC and we ensured that there was no TDS deducted.
Correct.
Will there be any more implication or any more course of action taken by the mutual fund investor to ensure that there is no tax liability for him?
Correct. So in such scenario, what you just need to be cautious about is for after applying for TRC, you need to first file Form 10F at Income Tax Portal. After what will happen after it, you just require to give these document to your AMCs, and AMC will not deduct TDS on that amount. Once TDS is not deducted, the government income tax department will be ensured that there is no such capital gain applicability on this transaction, since the test number 1 of applicability of tax is TDS, right? So in such scenario, the tax, since the TDS is not deducted by the AMC, the test 1 is passed. But let's say AMC has deducted the TDS. In such scenario, once your TDS has been deducted, then you have second option. While filing your ITR, you are just required to have these documented TRC and Form 10F. Form 10F has to be filed at Income Tax Portal before filing your income tax return. So at that time, while filing for income tax return, you can claim for the TDS which have already been deducted by your AMCs. Yes, this is the case.
So whether TDS has been deducted or not, I can still claim it at the time of filing the ITR. And even if TDS has not been deducted, basis the TRC and etc., we still have to complete the documentation at the time of filing the ITR, correct?
Yes, the most important thing is documentation. TRC, Form 10F. These are the two most important things, and the basis. Since many people will think why mutual fund is not covered under this tax exemption thing. Actually, there are some case laws as well. The recent case law is Cochin is related to Cochin Tribunal, where they have concluded that shares the definition of share doesn't include mutual fund. There are actually this is Article 13 of the DTAA between India and UAE, which says that for this point number 1, 2, 3, and 4. For point number 1, 2, 3, and 4, the power to tax is rest with the India. But for point number 5, which says that any other assets which are not covered in the point for the above 4 points shall be the power to tax shall be rest with UAE only. So this is the recent case law. On that basis, one can be very confident that you can get the tax exemption on this redemption of mutual fund.
So you are saying we have got precedents also where
Yes.
courts have given the clarity कि
Yes.
yes, this TDS can be avoided. In fact, this tax implication can be completely avoided
Yes.
by
Even if-
citizens of certain countries.
Correct. Even if TDS has been deducted by the AMCs, you have option to get it refunded while filing your ITR.
ओके तो शुभम किस किस कंट्रीज के रेजिडेंट्स मतलब NRIs टैक्स बचा सकते हैं अंडर दिस प्रोविजन?
अंकित, एज फार एज आई नो, GCC पूरा आ गया उसमें, बीट UAE, सऊदी अरेबिया, कतर एंड अदर GCC कंट्रीज, ओमान, यस, एंड सिंगापुर एज वेल.
ओके
सिंगापुर में भी काफ़ी इंडियन पॉपुलेशन है और NRI काफ़ी वहाँ पर भी बसते हैं. तो गोइंग विद द सेम प्रिंसिपल जो आपका GCC का जो है DTAA बिटवीन इंडिया एंड UAE, सेम चीज़ इंडिया एंड सिंगापुर का भी सेम ही है. इन केस ऑफ म्यूचुअल फंड वही प्रिंसिपली वहाँ पर भी सेम अप्लाई होता है. और सिंस वी हैव केस लॉ फॉर इट, कोचिन ट्रिब्यूनल का केस लॉ है हमारे पास, तो इन दैट सिनेरियो एज वेल म्यूचुअल फंड इज़ कवर्ड अंडर दिस टैक्स एग्जम्पशन स्कीम. प्लस उसमें और एक प्रेसिडेंट है कि जिसमें अगर आपके सिर्फ TRC अगर आपके पास है सिंगापुर का, देन दिस दिल्ली हाई कोर्ट इन ब्लैकस्टोन कैपिटल्स, तो वो भी एक है. तो अगर आपके पास TRC है तो यू कैन क्लेम टैक्स एग्जम्पशन ऑन रिडम्पशन ऑफ म्यूचुअल फंड्स.
तो दिल्ली हाई कोर्ट का क्या केस था, आप बताएंगे थोड़ा इस पे?
सर, दिल्ली हाई कोर्ट का एक केस है ब्लैकस्टोन कैपिटल्स के ऊपर है. तो उनके केस में एक्चुअल वो एक शेयर ट्रांसफ़र का है. इन द रिसेंट सिनेरियो आप देख सकते हो कि टेमासेक का हल्दीराम्स के साथ में उनका एक हुआ है. टेमासेक इज़ अ सिंगापुर एंटिटी, तो 5% उनका ये हल्दीराम का स्टेक वो परचेस करने वाले हैं. बट शेयर इज़ कंसिडर्ड द पावर टू टैक्स रेस्ट विद इंडिया इन केस ऑफ अ शेयर डील. वेन एवर टेमासेक जो है वो खुद का शेयर सेल आउट करेगा हल्दीराम का, तो उसको कैपिटल गेंस लगेगा. बट
तो उसका टैक्स इंडिया में ही लगेगा?
उसका टैक्स इंडिया में ही लगेगा. वो जो केस लॉ है वो सिर्फ ये उसके बेसिस पर हम ये बता सकते हैं कि TRC इज़ द वैलिड डॉक्यूमेंट. सिर्फ TRC के बेसिस पर यू कैन क्लेम दिस DTAA बेनिफिट. यू बेनिफिशियरी टेस्ट करने की हमें ज़रूरत नहीं है. बस एक सिंगापुर में एक यही है कि बेनिफिट ऑफ लिमिटेशन वाला एक क्लॉज आता है उसमें, बस कि इन केस ऑफ शेयर्स यू नीड टू रेमिट द अमाउंट टू योर सिंगापुर अकाउंट. बट इन केस ऑफ शेयर्स ओनली, म्यूचुअल फंड का तो पूरा ही एग्जम्पशन है.
ओके ओके सो आप कह रहे हैं कि दिल्ली हाई कोर्ट ने एक ऐसा जजमेंट दिया हुआ है जिसमें उन्होंने बताया हुआ है कि TRC ले आओ, आपका काम हो जाएगा.
करेक्ट.
Thank you, Shubham. Thanks for joining us and sharing so much knowledge. I'm sure a lot of people will benefit from this session. Thank you. Thanks a lot.
Thank you so much. Thank you so much, Ankit.